Hello, everyone, and welcome back to the Traders Mind Chat live show. Now, today we've got a very special topic. We're going to be talking about universal rules that can help you no matter what type of trader you happen to be. Universal rules for all types of traders. We're going to be talking about rules that help me as a swing trader to transition into day trading, and then other rules that I picked up as a day trader that help me trade better as a swing trader, and rules from both of those that have helped me to trade crypto. Now, before we get into all of it, if you guys can hit that like button, drop a comment into the chat, that helps blast this out to more people. I appreciate that. And with all that said, let's get started. Let me share my screen over here. We can start talking about some rules, some universal rules for all traders. Now, why don't you type into the chat? Let me know, what are some of the rules that you think that all traders should follow? Well, what are some of the rules that all traders should follow? Right, I've got a few of them written down here already. Right, well, let's see. Well, what are some of the rules that you think that all traders should follow? One rule that all traders should follow is to get odds on their money. Get odds on your money. Very important rule, right? You don't want to risk more than your potential reward. Of course, if you are have a 90% chance of winning, right? Then maybe your risk is a little bit more than your reward, but you always want to take that ratio into account, right? You always want to take into the account the reward to risk ratio along with your batting average. Two very important things that all traders should take into account. What else? What else do you guys think? What other rules should traders follow? Well, another great rule here is to not risk more than you can afford to lose, right? That's a great rule. Don't risk more than you can afford to lose. Don't risk more money than you can afford to lose. That's an important rule. That there's as simple as that rule sounds, there's a lot of people that learn that rule the hard way, including yours truly. That's a rule that I learned the hard way a few times over. Don't risk more money than you can afford to lose, and there's some good reason to that, right? Like, because if you knock yourself out of the game, right? If you knock yourself out of the game, then you can't play anymore. Then you can't make it back, right? If you risk more than you can afford to lose, then there's going to be all types of emotion uh, tied to that money, right? Like, you ever enter a trade and you start seeing dollar signs as the trade is moving in your favor? Yeah, well, when that starts to happen, that's one sign that you're holding the money too dear, and one of the uh, one of the things that might be happening in that case is that you have more money on the line that you could really afford to lose, or you ended up making more profits than you're willing to lose. That's another way to look at it too, right? So many trades in the past uh, few weeks have run up exponentially. Take a look at Roblox, right? Let me bring this chart over here, and we'll take a look at Roblox real quick. right? Here's one. Roblox. Take these annotations off here. Look at how far that ran in just a few days, right? From when it broke out down here, ran about 80%. 80% in about 2 weeks. Eventually, the money becomes a little too dear. And if at some point you're looking at the money, you're looking at the dollars and the cents in your account, you're going to want to take a little bit off the table, right? Take a little bit off the table, if for no other reason, just so that way it's easier for you to manage for the bigger move, right? Like if the dollars in your account are starting to weigh you down, might be a good time to take something off the table. Now, let's think about this one here, right? Well, what's the next? How about don't risk an amount that will kick you out of the game if you lose it, right? Don't risk an amount that will kick you out of the game if you lose. So what does that mean? That means that even you might be managing your risk, right? Maybe you're somebody, you're watching this and you're like, you know what, Mike, I actually do a pretty good job of managing my risk. I like to risk, say, 1% or maybe 2% of my capital on any one trade. And that generally is a very good idea. But what happens if you risk 1 or 2% and that your entry and your stop loss are so tight? Talking to some of the more advanced people in the audience, what if your reward to risk is so super tight that you end up going all in on this trade, right? Like let's say that yeah, you buy in, right? We could take a look at the actual position size calculator. Have a real good example here, right? So come over to tamarawealth.com. This calculator is for free. Scroll to the bottom of the page and click right here, position size calculator, free, right? So let's say you've got yourself, well, let's say that you're starting out with 10 grand, right? Nice round number. And let's say you're just going to let's risk 2%, all right? The market's good right now, right? So you want to use 2%, let's say. And let's say that your entering price is $50 on this idea. And let's say that your stop loss is 49. Yeah, well, what happens? What happens? You could do that. You could buy 200 shares and only risk $200, but you're going in with your whole account, right? As opposed to this being, let's say, 45, right? And then you're only going in with $2,000. But with the stop loss at 49, yeah, you're only risking that $200, but you're going in with your whole account. So let's say the next day a price gaps down against you, and then you're knocked out of the game. That's what this rule here. That's what this rule here is talking about. Don't risk an amount that will kick you out of the game if you lose. Now, what else? Well, what other rules are there? What are the rules? Here's one more rule for you. Pick a style that matches your goals, your beliefs, and your ability to execute. Now that's a personal favorite of mine. Pick a style. Pick a style that matches goals, beliefs, and ability to execute. Now, here's why. If you're trading a system and it doesn't align well with your goal, then, well, what's the purpose of trading the system, right? Let's say that your goal is for long-term appreciation, or let's make it a little bit more exciting, right? Let's say that your goal is to quit your job at the end of 2021. And in order to do that, you need to double your capital between now and the end of the year, right? So you have about a month and a half to do that. Now, if your system is a Warren Buffett type system. It works. It generates maybe about 15, 20% a year long term, right? Pretty reliable. Is that system helping you reach your goal to quit your job at the end of the year? Probably not, right? So your system has to be aligned with your goal. Now, what about your beliefs? Right. Well, what about your beliefs? What if you have a belief that says that you know what, money's hard to come by. Money doesn't grow on trees. You have to work hard for money, and that someone comes by and they hand you a trading system that can generate 100% returns in a year, right? But you have to deal with a little bit of whipsaw. You have to deal with a little bit of pullback. Maybe the system, the batting average of the system is about 50%, but on average, you're turning that account over. And on average, you're making at least 2 to 1 on your trades, sometimes even 3 to 1 on your trades, but you're only winning half the time. That might be hard for you to use if you have a belief about money that says that money doesn't grow on trees, money's hard to come by, you have to work hard for money. You have a few losing trades in a row, and it'll be very difficult for you to execute that kind of a system. Right? And then this last part here, execute, right? You need to be able to execute your system. Now, let's say I gave you a day trading system, but you work a 9 to 5 job that requires you to be busy during those hours when the market is open. You wouldn't be able to execute that strategy. So the execution part is very important. You need a strategy that you'll be able to execute and execute reliably. Looking at these rules, right? We've got 4 rules on here. Right? Let me know if you can think of any other rules while I sip this water. Any other rules? Yeah, you know what? As far as universal rules go, that might be about it. Right? There's a lot of other things that could go in here. Oh, well, you should look at fundamentals or technicals. Or, no. Right? Well, fundamentals, technicals, none of that stuff is universal. There's people that don't look at fundamentals at all and they do extremely well. There's people that don't look at charts at all and they do extremely well. That's the part that needs to really align with your personal beliefs and in trading in line with your beliefs. That's one of the reasons why I wrote that book back there on the wall. I'm not sure if you could see it back there, but it's a beliefs guide, beliefs workbook. So that way you could go through it and become aware of the different beliefs that you have, write them out if they're serving you. Now, let's talk about rules for swing trading that actually help me day trade. This is an interesting topic, and the reason why is because for a long time, if you guys checked out that video that I put in the description over on YouTube, it, it was in 2019, the middle of 2019 to the beginning of 2020, where it still blows my mind that I was able to have this kind of incredible return, almost 13,000%, just under that, in only about 9 months. It blows my mind. It almost doesn't even seem real. But when I went back to that account and I looked at it, it was just like, holy shit, like that's the actual that's the actual return. Now you might look at it and say that, oh, well, what's the dollar amount? The dollar amount, well, was negligible. It was a small account and it was an account that I was using on Robinhood for testing, right? Testing out different strategies, and I ended up with a real big drawdown in that account in the beginning of the account. If you saw that video, but what made me proud of that exponential return, right, was well when I eventually stopped that testing, and I was like, yeah, this test isn't going that well. Let me switch gears, and I switched to this to rules for swing trading that actually helped me day trade, right? So I started to apply the types of things that were working well for me in my swing trading to day trading. And here, now I want to share some of them with you here. So some of the rules that helped, right? Rule number one, fractal patterns, fractal patterns work. Right? Fractal patterns work in day trading, right? So here's a great example. Bring it back over here. Where is it? Roblox, right? So this chart here, right? Like if you're a swing trader and you're looking at this, you might say, how the hell do you even get in when price gaps up like that? No, that's already gone. Well, great way, even if you are a shorter term swing trader like myself. We saw this pattern, spoke about it the other day in here. You see this is a 30-minute chart. 30-minute chart. Here it is. Very nice. Cup with handle. Breaks out over here. That's a great day trading setup there too. Right? If you start to drill down even deeper on, say, a 5-minute chart, and you're looking at this, and all of a sudden price breaks out over here, right? Looking at it in this way, it kind of looks like a VCP. Price breaks out to the upside, and it's running, and it's running, and it's running, and then maybe over here, that's where you're starting to sell out your last piece of the first one, right? Because in day trade, something that I came to appreciate is that you do not want to give back gains, especially when you're trading options, right? That's what helped me have that monstrous return. And it wasn't just like, oh yeah, it was the option was up that much. No, it was the account that was up nearly 13,000% from the worst part of the drawdown to the peak in 2020, in February 2020. So that brings us back. Fractal patterns. Fractal patterns work so long as you're trading in the direction of the higher time frames, right? That's another part of it too. So I think that'll be the second rule in here, right? So a pattern, right? So a rule in swing trading that works in day trading is to trade in the direction of the long-term trend. Always trade in the direction of the long-term trend. That was something that helped me out a lot when I was day trading and day trading options. Uh, Often, well, what'll happen is that you'll see a stock that is very much extended on a daily chart where you wouldn't touch it, but it happens to make an excellent day trade, right? Like even Roblox over here, right? Let's say that you're looking at this on a 5-minute chart, right? Which this is, and you see this little inverted head and shoulders pattern, right? Maybe you're seeing that. Maybe you're trading this up here too, right? So you have that pattern there. You have that breakout right over there. Both of those are tradable. You might see this as a VCP and trading that. That was actually a gap up the following day. You wouldn't have traded that because that's the end of the day for a day trade. You wouldn't take that since it's the end of the day. But this gap up here You might have taken that. That's when that was this morning. You may have bought that gap first couple of minutes, maybe it drill down even further, go on to a 1-minute chart. 1-minute chart over here. Yeah, you see how it starts to gap up this way? Maybe you're buying that gap and then watching it run up there. Another way to do it. Yeah, and day trading too. Another thing that I learned was that it's generally a better idea to wait the first couple of minutes to not trade on the exact opening bell, but to give it at least 3 minutes, 3, 4 minutes, because on a gap up, you might get action like this where price has that big gap up, and then the next bar, the next candle looks like this. We have an outside reversal. Yeah, give it a little bit of time to set up so that way you can trade in the direction of the trend. Next, here's a great rule. Here's a great rule. When you're working at a profit, when you are working at a profit, a sale could be a buy. When you're working at a profit, actually, no, that's hold that one. That's actually for the swing trading rules. Hold on 1 second here. Here's another rule that works well. Let some of your profits run. Let some of your profits run. Now, why some and not all? Right? Why some and not all? Well, in a scenario like this, if you're letting all your profits run, what happens when you experience the first pullback, right? And prices pulling back sharply. You don't know what is about to happen. Right? You don't know if it's going to continue running up. You don't know if this is going to happen where it's just the beginning of a sell off and eventually the price just never comes back. Right? So selling some into strength is generally a good idea. So that way, you sell a little bit into strength, you're an automatic winner. Let sell a little bit more as it runs higher, sell a little bit more as it runs higher, trail the rest, continuously lock in your gains. It's a great way to keep on nailing down more and more profits. And yeah, if you are letting the entire thing run up, right? If you're letting the entire thing run up without taking any kind of profits, it's kind of like piggish, right? Or pigism, where you want to try to make more out of the potential trade than you really can, and then you end up giving a lot back. Right? If you nail down profits, you could sit through some of these pullbacks and it doesn't bother you that much because you've already locked something in. Then it puts you in a position of, oh, you know what? Price is pulling back, right? Price is pulling back over here, let's say, and you're looking at this, and price is pulling back to that 10 EMA exponential moving average, and it might be a buy since it's the first time that it's pulling back to that since it broke out down here. Allows you to have a different mindset. And maybe you start to trade around the position that you already have profits in. Maybe you sold a little bit over here, you sold a little bit more over here. Maybe you're buying some back when it pulls back over here because it's pulling back to that 10-day moving average, or not even 10-day, but a 10 EMA, 10 period moving average. And then you say, all right, I'll add right as it's pulling back. And then if it continues to fall through, then I'm blowing out of the position, right? You could be a lot more tactical because you lock in profits along the way. It's a psychological trick that you could uh, use to work in your favor. What else? Well, what other rules are there for swing trading? Other rules that help me with swing trading. Let's see. We talked about the fractal patterns. We talked about letting some of the profits run. We talked about trading in the direction of the trend. And yeah, well, we just spoke about when you're working at a profit, a sell could be a buy, right? So that's kind of getting rolled into both of these. Let's talk about the next one over here. By the way, did we have any questions before we move on? Any questions before we move on to uh, the next topic over here of rules I learned day trading that helped my swing trading? Any questions? Go ahead, type them into the chat. So next up, rules I learned for day trading that help my swing trading. Right, so there's a bunch of rules, bunch of things that I learned in that day trading journey of running that account from next to nothing to having a 13,000% return in only about 9 months. And again, go check out that video that I posted on YouTube of how I was able to make that happen. The Again, it was a small account, but the thing that I'm most proud of with that was not even the percentage return, but the ability to dig myself out of that massive hole. That's something that personally gave me a lot of confidence that yeah, you know what, like I'm capable of digging myself out of uh, a really really rough spot, and to be able to day trade under the PDT rule in that account was another thing too. So next up, rules I learned day trading that helped my swing trading. Well, the first rule I would say is to that habit of selling into strength. Selling into strength. It was something that I was doing before I started day trading, but when I was day trading, that really cemented that rule, right? To lock in gains, take profits while they're there. Don't sell everything, right? Like the don't. I'm not talking about blowing out of a position, but taking bits and pieces off into strength really helps you play out for a bigger move and puts you in a place of strength in managing the trades. Next up, uh, take profits when you have them, right? Very close cousin of the above. Take profits when you have them. Right? Monitor the behavior of price action. Don't just sit and wait forever for a trade to materialize. If it's not behaving the way that you thought that it should, then start to scale out of that position. A core belief that I have is that the market is an infinite stream of opportunity, right? That's something that I actually write down. I write that down on a piece of paper every single day before I start my trading day, and it reminds me that yeah, you know, well, I like if I do take profits, if I do sell a little bit too early and price starts running and I could have had a little bit more. Well, the market's an infinite stream of opportunity, right? Like just keep on trading, keep on doing your thing, keep on executing the system that's a proven system and works. And money will come. Money comes as a result of you continuously executing your system that works and you continuously getting better and becoming better at your craft. That's the key thing there. What's next? Next up, this is an important one for swing trading, right? Don't be a pig, right? Do not be a pig. What does that mean? Well, what's pigism, right? Pigism is when you have a big profit and you want to try to play it out for more. You don't lock in any profits and you give this thing way too much room. The problem with that is that you are failing to respect uh, risk, right? So here's a few examples, right? Here's a great example. Here's a personal example. Upstart. And let's talk about Upstart. Upstart's a trade that I was in. I was in Upstart right back here. Actually, yeah, on that day right there, that's where I started my position in Upstart. My stop was somewhere down here in this neighborhood. I rode this up. I started scaling out into strength on the way up. Right, I added a little bit too. I added a position back somewhere in this neighborhood over here ahead of earnings. I thought that this was a true market leader, and I wanted to ride it through earnings and see if it would break out to the upside. But this first position here, and then this is the important part of the story, or one of the important parts, is that I didn't sit with the entire position as it made this pullback here. I sold a significant portion into strength as it was making its run up. Then when it pulled back, right, and then it did this after earnings, right, that was a 20% drop right after earnings. My loss on the trade was only about 1%. It dropped 20%. My loss on the trade was 1%. And the reason why was because I was not a pig. Very important. Do not be a pig. One of the most important rules. Here's another rule. Raise stops ASAP. Protect your break-even point as soon as possible. What's as soon as possible? That's going to depend on you and your trading system and what is as soon as possible per your system. For me, what I'm looking for is for price structure to start to move out over here, right? So using this example, right? When price started to move out and follow through, that was the time for me to be raising my stop to break even, right? So that way I'm protecting my principal. Next, raise stops ASAP. Next up, the first loss. First loss is often best loss. First loss is often the best loss. Well, there's one that I learned in day trading, right? If we go back to one of our examples in day trading, and let's say that we were looking at day trading Roblox. Let's say that we got in on this, and let's just say that we experienced this pullback over here, right? And what we got shaken out somewhere in this area. It's much better to take a loss that's over here than to take a loss that's way down here. And like even if you bought this and you were like, all right, this is running up, it's running up. Oh, it's pulling back. Oh, it'll come back. Oh, it'll come back. Oh, now I'm sitting at a loss. Uh-oh, now the loss is getting worse and worse and worse. Right? Don't want to do that. Don't want to let that happen. That same rule applies very much to swing trading. Your first loss is your best loss. Keep your losses small. Finally, last rule that I learned in day trading that helped my swing trading. This is another very, very important rule. Put that over here. The rule is only trade in a peak state. Only trade while in a peak state. What's that mean, peak state? Peak state, it's not the state that you live in. It's not, for me, it's not New York, right? I have probably a good idea to to move at some point. Yeah, and New York is, well, there's a lot of great things to love about New York, but not the government so much. But um, the state that I'm talking about is your mental state, right? Well, when you're trading, you want to be in a state of calm, cool, collected. You want to be in an energetic state. You want to be alert. Um, you want to be aware of what's happening, uh, both your in your own surroundings, in your portfolio, in the market. You want a state of awareness, right? If you are tired or lethargic or you're not well and you try to come up with some trading plans or you're trying to trade and you're not feeling well, are you going to have a better trading session or a worse trading session? All else held equal. Like this isn't tough stuff, right? Like it's common sense, but it's something that's worth stating because, well, sometimes it's if we're not consciously thinking about this stuff, then common sense tends to not be as common. In day trading, this is extremely important. In swing trading, uh, I take this and I put this also for planning, right? So I want to be planning my trades when I'm in a peak state. Like if I had a rough day, let's say like something bad happened to you, right? Or you're having a rough day and you sit down, you start planning your trades. Well, that some of that negativity might bleed into your perception of the market. So that's the reason why before sitting down to plan your trades, you want to put yourself into a peak state. Put yourself into a state where you are feeling at your peak, when you're feeling alive, when you're feeling energetic, a state where you're feeling calm, where you're feeling zen. All good things to have in your trading. Now, finally, last thing, let's talk about some other rules. Some rules that help in crypto. Some rules that help in crypto. All right. So, what are some rules that help trade crypto that you might learn from day trading or swing trading? Maybe you're trading stocks, maybe you're trading forex, maybe you're trading something else. But what are some of the transferable rules that you might have that can go into and be helpful in crypto? Well, I'll share some of mine. While you guys share yours, type it into the chat. Let's see. One rule is zoom out. Zoom out. Right? Don't get too caught up in the minutia, especially in crypto. The crypto markets are not quite as regulated as perhaps the stock market is, and it's not uncommon to see wild swings in the crypto markets. So when you zoom out, right, like let's take a look at some of the crypto markets. Crypto is coming in a bit today, right? It's been coming in a bit the past couple of days. Here, let's see. Yeah, here's a 1-minute chart of Bitcoin, and you might see some people talking about Bitcoin. Oh, Bitcoin, that Bitcoin's going to be in a major decline. Right? Well, it did break its 50-day moving average. It did make a lower low. Right? All those things are not exactly positive. Right? But what if we were to switch over to a weekly time frame? Right? Things don't look quite as bad when you zoom out just a little bit. Could this be a top? Could it be rolling over? Well, maybe. Right? I'll be the first to admit I don't know if it's going to roll over today, tomorrow, or next week, next month. But I am able to see where price is right now, and I am able to see a case for why somebody, not me per se, but why somebody might be a buyer right there. Right, it's right at the 10-week line. Right, that red line, that's a 10-week line. That's where some of your bigger institutions that are moving around billions of dollars, they're going to be using more of the weekly time frames if they're looking at charts, and they all really are. Right? Like everybody's using charts at this point, but working off of time frames like this. Why? Right? Well, when you're moving around billions of dollars, it's kind of hard to fly in and out of positions. Take into account the weekly time frames. Right? Zoom out. Zoom out. Take a look at a monthly time frame. It's rolling over. Is it rolling over? Or is this going to be a minor pullback? Right? Everybody thought that, well, I shouldn't say everybody, but there was a lot of talk about this being the end back here, right? That was a pretty severe pullback back in May, right? Corrected 50%. Who's going to want to trade that? Well, here we are, 120 some odd percent later. Now it's pulling off the top. Maybe this is it, and that's the end of Bitcoin. Or maybe we look back in another couple of months and it's barely a blip. Right? At one point that was a nasty month. Right? So was that. Key is that we want to avoid these prolonged downtrends and stay in for the bigger uptrends. One of the ways that we do that too is by locking in, right? Taking some of the rules that we learned from before in our swing trading and in our day trading is to what? Don't be a pig. Lock in significant gains when you have them. Now, there's a big difference between being up 20% and being up 100%, right? And it's not just the dollars and cents that are tied to it, too, right? Would you want to give up 100% gain, right? In crypto, 20% gain really isn't all that much. It could move that much in a day. But if you've made 100% in in a trade, it's hard to sit there and give it all back. Take something off the table. Here's another great rule, right? Something that I picked up on. The major coins, right? The major coins, I'm talking about your Bitcoin and your Ethereum. They behave very much like the major indexes, right? Well, what the hell are you talking about, Mike? Part of what I'm talking about when you're looking at Bitcoin and you're looking at Ethereum, look at those charts. They look very similar, right? Very similar when you're looking at the major indices. Right? We've got the S&P 500, the Nasdaq, Russell 2000, the New York Stock Exchange, the Dow. They're all moving about the same way, right? Same thing with your major coins, right? If you are looking at some of your not so major coins, they're a bit all over the place. Stick to your majors, and you'll have a good idea of what's going on. Here's another great rule for uh, crypto that's helped me out quite a bit. Buying weakness. Right? And this will be the last one for today for me. And you could let me know what other rules you would want to add. But sometimes, right? Sometimes buying weakness, buying weakness makes sense. And here's why. Right? If you're dealing with a market that's so whippy, right, and can pull back so sharply in a period of few hours, sometimes even a few minutes, then and you're seeing a move like this, I'm going back on the chart over here to look at this move earlier. Oh, when was this? This was September. So September 21st, right, when uh, Ethereum was selling off, right? It was started to sell off in the beginning of September over here, and then it pulled back, ran up again, pulled back, fell below the 50-day moving average. Then it was starting to fall into the 200-day moving average, and so what I decided to do was I decided to place an order at 2,900. Right? Uh, Sometimes they say don't buy a falling knife. Well, if you, it's a little bit more advanced, but if you know where the floor is or where the floor should be, then you might be able to grab a falling knife by the handle. And you also know where to cut your loss if it continues to fall. So I bought right there at 2,900 because I thought that, well, you have the 200-day moving average that's rising right there. Look, when you see price falling like this, look to the left. See, is there any kind of structural support? Sure enough, back over here, right? There's that little shelf. If price pulled back around right in here, back in August, and now you have the 200-day moving average there. All important things to be aware of. So then if you do that, you could buy and hold through this. And then when a move like this happens, and I'm still in Ethereum, right? I'd be lying to say like, oh yeah, this is pleasant, this is easy. No, it is a bit uncomfortable, but I'm not panicking. And the reason why I'm not panicking is because I have a pretty hefty cushion in this. Now, might I do some selling? Yeah, maybe, right? If the weakness continues, if I know that these two kind of affect one another, and I start to see that the selling is continuing and there's not much buying coming in, well, maybe rather than waiting for this whole thing to play itself out, maybe I do take some off the table. But I'll tell you what, it's locking in gains versus having to uh, you know be buying way up here and then having to cut a loss, right? What works in crypto is a little bit different sometimes than on stocks, just on the way that the price moves and how you're able to enter. Sometimes it's that you're better off anticipating a move in crypto versus waiting for it to actually happen. So that's it. Those are all the different rules that I have for you for today. Spoke a lot. Spoke about rules that help in crypto, rules in day trading that help swing trading, rules for swing trading that helped day trading. We talked about universal rules too. So um, I want to thank you all for being with me, for being here with me today. I appreciate your support, and I'll see you all next time on the Traders Mind Chat Show. Take care. Much love. Peace out, everybody. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.